everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our 21 SPY and ES mean reversion systems with about 90% winning trades, and of course our amazing KISS trend systems, which work virtually on any instrument. And anyway, let's go ahead and get started. It's been since the weekend since I've done a update on the market. This is a state of the market review for Wednesday, September 13th, 2023. This is our back-end recording, which I'm going to go ahead and get started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, September 13th newsletter. Tonight's newsletter, as you can see, is divided into 7 major sections, same general theme as I always keep. And by the way, I did add a few trade ideas here. As far as this week, it's been a choppy week as expected, and short term, what we're monitoring is some coiling actions, coiling patterns, particularly on the S&P and Q's daily, and in the very short term, say a 15-minute chart, we're monitoring a very obvious coil pattern. By the way, seasonality turns bearish again, I think next week. So we'll see what the market does. Again, we had the CPI numbers today. They came in basically as expected. Tomorrow on Thursday, we have PPI. All right. Next, item number 2. This is a 15-minute chart of the S&P. Again, I'm going to discuss it further in the newsletter, but I always like to show you what we're looking at short term so you don't have to wait till you get into the heart of the newsletter. Forget about it. So this is a 15-minute view of the S&P cash. Again, you can see we've essentially been coiling all week. Today we bounced off the bottom of the coil, and tomorrow PPI will see what price does. If it continues to follow the coil, wouldn't be surprised if it pushes up higher. And if it can get out of the coil, there is this open gap at 44.96 that could still be a magnet. Okay. Short term, I'm leading up to the upside. Starting next week or later next week, when seasonality turns more bearish, I'm a little more cautious after that. I wouldn't be surprised if the market did come down again ultimately, and into the September, even October timeframe, then we form a better low. We'll see. We'll play and react to whatever the market does. And of course, our systems and our KISS trend systems, they'll follow the market and make their own decisions as they do. Next, item number 3 shows the index sector table, what transpired this week and today. So today was basically a bifurcation. The Dow and small caps were down, while the S&P and Nasdaq were slightly up. For the week, we have the small caps down, the other indexes are slightly up. As far as the major market sectors today, pretty broad, basically a 50-50 mixture of up and down, as you can see. Weakness was concentrated in oil services, energy, home builders, real estate. And you can see how the things look for the week, pretty similar. US dollar up a tad, still down 0.25% for the week. Cryptocurrencies bounced back today, and I'm going to show you we're going to discuss some individual stocks in that area to watch. As far as commodities, the DBC index was up. Crude oil, start over again. Crude oil, you can see, was slightly down. It's up 1.2% for the week. Same for the index, went up 1.3%. Natural gas down 2.3% today. It's still up for the week. Otherwise, natural gas for months has just essentially been going sideways, trying to base out. Copper was just slightly, almost flat today. It's up for the week. Agriculture had a good day today. Corn, wheat, and precious metals, though, they still remain weak. Gold down about 0.25%, silver down about 1%. GDX, the gold miners, down 0.25%. As far as bonds, both the 10-year, 30-year were slightly down. Next, item number 4 shows the economic news calendar. So September 14th, tomorrow, we have the initial jobless claims, but obviously the PPI, core PPI are going to be in focus. Then you have retail sales. All right, guys, let's go ahead and move on. Now, before we get into the index analysis, let's talk about our KISS systems. Okay, we launched these in a big way this year. There again, if you're new to Breakpoint trades, go to the systems section, click on KISS STS tables, and there you'll come to this the KISS systems. We run the KISS systems on essentially 630 instruments. Most of the major ETFs, all the S&P 500 stocks, all the Nasdaq 100 stocks, all the Dow Jones stocks, and whenever these systems take a trade, they're long only. They'll enter, and as price goes up over time, they'll raise what we call it's STS, that's smart trailing stop, and they'll raise that up over time. So on the BPT basket here, you can see Google had a new smart trailing stop generated today. It moved up from 126.90 to 128.20. There's been 8 smart trailing stops since the system went long, and it went long on July 13th, and it's up 9.5%. AMD's up 2% from entry. Amazon's up 41.8%. It's had 19 smart trailing stops since the entry on March 30th. Okay, again, not everything's always up here. Nvidia, it closed out a monster trade earlier this year, 150%. So yes, this current entry is down 9.4%, but the previous trade was up 150%. So no big deal. Okay. Again, this is a very valuable resource. You should utilize it. You won't find anything else out there, guys. If you do, let me know. But this is exclusive to Breakpoint Trades. Image number 6. So here's, again, you can see all the tabs at the top. Here's the top 100 ETFs. And again, you can see URA had a new smart trailing stop today. That's been a really nice one. That's uranium ETF. And I've actually been bullish on that sector for quite a while. It's raised its stop 7 times. And currently it's up 14.5%. But you can see some of these gains here. Finally, image number 7. So guys, remember to set your favorites. So when you go to the KISS section, click on the favorites tab on the right, and there's a checkbox here you have to check it. It's not checked marked automatically because of spam laws. You have to set it yourself. But once you do that, whenever you set favorites, and how you set favorites, you just simply click the star next to whatever instrument you want, whether it's Apple or URA or Amazon or whatever. Whenever there's a new smart trailing stop, you'll get an automatic email notification. So, when you get your email notification with your new smart trailing stop, you could simply decide to use, raise your stop by that. Pretty impressive, pretty cool. Again, if you haven't set that up, do so. And if you're just watching this on YouTube, you have to be a subscriber, obviously. So, you should be a subscriber. Membership is very reasonable here. It's $50 a month, essentially. I mean, these days, that's nothing. I mean, a lot of you probably, spend $7 at lattes at Starbucks. So if you put that in perspective, you buy one of those a day, you're spending, $200 to $300 a month at Starbucks, and you're worried about a $50 membership that makes you money. Put things into perspective, guys. Just saying. All right, let's move back to the general market analysis. So image number 8, here's the Dow, no changes. You can see the recent rally off this trend line stalled at the 61.8 fib, and so far this week it's been stalling at this little thin downtrend line. Otherwise, your bigger support is this uptrend line. Next, moving on to the S&P 500 chart. Number 9, here's the S&P daily. Again, what we're monitoring is this tight coil pattern. Okay, energy's building here. Again, we're above the 20 MA. Everything. We'll see how things react. Again, like I said, it's possible that this completed a 4th wave pullback and we're going to rally to new highs. It's also possible that, price even pushes up here, goes up enough that people think it's going to make a new high, right? Suck the bulls in, do something like this, and then crash, into the September timeframe. That's a real possibility. or at least that I'm considering. So we'll see. But right now we're still in this coil. Next. Chart number 10, here's the daily chart showing these different wave counts. Again, the thing we've been leaning for is this wave 4 pullback. We've been discussing that since July. Again, is it possible wave 4's low is in? It's possible. It's also possible that, like I said, that we, ultimately come down again, into the September timeframe, seasonality, and complete that, and then rally up for the end of the year. Next. Chart 11, here's a weekly view of the S&P. Again, it's only Wednesday, but so far for the week, the S&P's up 0.2%, so not much. Again, we'll see if we do get a pullback again versus seasonality. Maybe something like this plays out, a pullback to the lower portion of the channel. I would certainly love that. Again, you don't always get what you want, but we'll see. Next. Chart number 12, here's another daily view, shows you the similar chart as that weekly. You can see the bigger channel here. And the rally last week, where did it stall? Right at the back test of this broken trend line. Logical area to sell off of. Next. Chart number 13, here's the KISS trend system for the S&P. It closed out a nice winning trade in early August. From that March entry, it is still flat, and the markets have been going sideways. Moving average ribbon is really pinched here, something to watch. That makes sense with the coiling action that we're seeing. Next. Chart number 14, here's the 4 time frames we like to monitor. Here's the daily up here. One thing to note, notice the dot here, that's a resistance cycle. That's something to be aware of. We're above the ATR in these time frames, the daily and the half day. You could see the ATR support here. You could see last week we had those A's. That's the amateur buying. They chase rallies, and that led to a little top. The lower time frames are below the ATR, which is resistance, as you can see. Next. Chart number 15, here's a half-day chart of the S&P. Just monitoring. We bounced off the supply zone, as you know, early in the week. Monitoring this potential channel as well. Notice your moving average ribbon is squeezed. Next. Chart number 16, here's a 60-minute view with some fibs. We bounced off the 61.8 fib at 44.30. Since then, I've been chopping around. Next. Chart number 17, here's another 60-minute chart. Again, you can see this potential coil that's forming. So a lot of potential wiggle room that could occur inside the coil, move up, move down. We'll see which way it resolves. It's possible that this coil price won't break out of this coil until perhaps next week. Next. Chart number 10, here's the 15-minute chart that I discussed, this obvious coil. Again, keep it simple, kind of like the systems, right? We bounced off the lower portion of this coil. That was a good area to go long today. We're basically in the middle of the coil. And we'll see how price responds to the PPI on Thursday. Again, this upper trend line would be resistance. You have this obvious open gap up here that would be an easy magnet if we can take out this coil trend line. Finally, chart number 19, here's a 10-minute chart. I actually meant to remove this, so let's go ahead and move on. Chart number 20, here's the triple Qs. Again, you can see just like the S&P, you can see this same potential coil that's forming. Qs obviously holding the 50-day, 20-day, etc. Again, you got to remember though, guys, the Qs especially, but even the S&P, what is masked, there's a handful of stocks, 10 stocks that have produced a majority of the gains this year. And so the indexes look much stronger than they would be without those 10 stocks. Something like, I don't have the stats in front of me, but it's something like if you remove the 10 stocks, then the S&P would only be up like 4% this year. And I can't remember what the Nasdaq would be, but it wouldn't be up 40%. Next. Chart number 21, here's the KISS trend system for the triple Qs. Again, it closed out a really nice long trade from March into early August. It did go back long here again. Still got a wide smart trailing stop. Next. Chart number 22, here's the 4 time frames. Again, on the daily here, we do have this resistance cycle to be aware of. Half day, again, we bounced off the ATR, which I said to watch. And you have that support cycle. Lower time frames were below, we're below the ATR here. Next, chart 23, here's a 30-minute view. This area is the supply zone, which you can see so far price has been stalling at. Next, chart 24, here's a 15-minute view. You can see a lot of chop here lately. Little wedge that played out for a quick pullback, bounce up, and we'll see what happens tomorrow, folks. Next, let's talk about Apple Crapple. Okay, Apple, as you know, had their big event yesterday, and quite honestly, guys, man, it had to be the most, trying to use the right word, uneventful Apple thing, where people were the least excited I've ever seen. And, good reason. Apple, their earnings haven't grown in 2 years. They have like a 30 multiple. I mean, very incremental updates. Do you really need a new iPhone? Spend another $1,000, $1,100, $1,200 on a new iPhone that is very incremental upgrade. And, with inflation high and everything else, people struggling, record credit card debt, that puts Apple at a disadvantage. But anyway, I digress. Apple, remember I pointed out that bearish symmetry break back in August. It played out for an initial move down in A. I was looking for a lower high wave B, and I said to look for short that. And so far that has been playing out nicely. Maybe its next target is this 200-day moving average. Next. Chart 26, here's the 2-hour view of Apple. Again, you can see it got right into that open gap area, stalled there, sold down. It got a little trend line here. Really doesn't look pretty. It looks pretty weak here. It could easily just bust down. And Apple's such a huge weighting on the market, guys. Think about it. Next. Now, guys, let's talk about the bigger picture, though. So here's a monthly view of the Apple going back to 2007. It's obviously had one hell of a long-term percentage gain, as you can see. But here's the bigger picture, guys. This has potential to set up a larger top that could last for a couple of years, like a multi-year high. Look at this obvious MACD divergence here on the monthly chart. Okay, think about that. Now, and right now, price is slightly below the 9-month EMA here. If it holds below there, then easily would go down to the 20 or even the 50-month over time. But another thing to watch is this RSI trend line. These RSI trend line breaks tend to be very powerful, and that's something to watch too if this ever breaks. Finally, chart 28, here's another monthly chart of Apple. Now this is a logarithmic chart, and this is also a good education. Logarithmic charts will allow you to draw a trend line where you can't draw one on a linear. And you can see you can draw a nice trend line. So maybe over time, this trend line could be a target. Okay, just something to consider, guys. Next, chart 29, here's IWM. Continues to be extremely weak. Again, it stalled right at the upper portion of that ascending triangle in July, which was our target. Sold off, bounced. Look at that bounce, lower high. Notice the moving average ribbon. You see how useful this is? Moving average ribbon went bearishly stacked, and then it pinched on the underside at that lower high. Just lines up. The moving average ribbons are a really good guide. It's a great example. Here's an example of the RSI trend line break. Gave a great sell signal there, basically beginning of August. See that? Draw these trend lines on the RSI when you can. Anyway, we'll see what this does. Here's some fibs below. Kind of has a little head and shoulder look. Next, chart 30, here's the daily with its potential head and shoulder, just something to be aware of, guys. And that does it for the major indexes. Let's move on. Chart 31, here's the VIX. VIX did sell off today. This is your long-term support. Next, chart 32, here's a 15-minute chart of the VIX. So the VIX, bounced today, stalled at this broken channel. There's this open gap here, which if the market wants to push higher here, which I favor in the short term, then maybe this VIX fills this gap. Something to think about. Next, chart 33, here's the NYSI indicator system. Just wanted to give you guys an update and an example how this works. So this is not given a buy signal, despite the fact that the stochastic here turned up. That's not your trigger. Your trigger is it's got to take out the previous week's NYSE candle high, and you could see I drew the horizontal line there. It hasn't done so. But you can see the past signals. They've been pretty good overall for nice little trends. Next. Chart 34, here's the S&P versus the BPSPX. That's the bullish percent S&P. And again, I pointed this out on the weekend, but you have this really obvious divergence. BPSPX is declining strongly. S&P has a lower high. So what this may be telling us is the S&P is going to play catch up. Again, bearish seasonality, I think, starts next week on the market. Chart 35, here's the BPSPX system. The system is basically you get your triggers by these moving average crosses. Overall, they've been very good signals. So you can see that last rally we've had, we never did get a buy signal. We had a sell signal back there in early August. Next. Moving to bonds, chart 36, high yield corporate. Now this is still holding up fairly well, and it was up today. Market tends to follow this, so this is still holding up. Chart 37, here's TLT 20-year bonds, essentially flat today. Again, we did have a bullish symmetry break here, so that argued for a higher low, which so far we have. Next. Chart 39, here's the 10-year treasury yield. Short-term positive is rates stopped at this horizontal resistance. Okay. So that's one thing that could help the market is if rates pull back here, that would help the market certainly. Next. Moving on to some sectors, just going to do a quick follow-up here. Here's XLK Technology. Get to see the updated chart. Chart 40, here's transports. That bear flag played out. You have the 200-day moving average down here. They're still fairly weak. Chart 41, XLF Financials up a little bit today. Chart 42, retail. Remember retail sales tomorrow in the morning. This still looks quite weak. Looks kind of like a slanted head and shoulders. Chart 43, XLE Energy. This area, good fundamentals, been strong, especially with crude oil. Reversal today. Again, it's still holding its 9 EMA. It needs to lose that on a closing basis to start some sort of bigger correction. You do have an RSI MACD divergence here, though. Next. Chart 44, here's the bullish percent energy index. As I've been covering, this is up at sky-high territory, almost 96%. The low-risk time to buy energy stocks for swings is when this sucker's in this oversold range. You got a buy signal back here in June. That was a great entry. Up here, it's not a great swing, obviously. Doesn't mean it can't push higher, but it's not a good swing entry. Chart 45, ERY. Discussed this on Monday. Had that big reversal candle, but again, it stalled at the 9 EMA and sold off yesterday. Up today slightly. Again, could it be bottomed here? It could. Again, if you took a long, you put a stop at the low. But a good confirmation will be closing above the 9 EMA and then, of course, the downtrend channel. But that'll be a way to play a pullback in the energy space, this ETF. Chart 46, there's the 2-hour review. You do have some MACD divergence here still. Next. Moving on to commodities, chart 47, DBC continues up, marching higher, up 1.3%. Really nice trade off this 200-week moving average several months ago. Chart 48, there's the monthly. Again, I just like to show this because I think this is in a long-term bull market. Simply had a 3-wave ABC pullback, from the highs last year into this year. Next. Chart 49, there's the daily. You had this falling wedge. You broke the wedge, broke the 200-day moving average, pulled back, held it as support, and rallied up nicely. It is getting a bit stretched here. Again, these moving average ribbons are your guides, right? When they're pinching like that, that tends to be good areas to watch for a good type of a buy or sell signal. It was a good buy signal. It was a pinching from a bullish configuration. And when they get too expanded is when price, needs to correct. So it is getting a bit expanded here. Notice your 14 RSI is at 70, almost 77%. Doesn't get overbought that often, so it is getting a bit stretched. Chart 50, here's crude oil off the highs today. Notice how, again, just talked about these moving average ribbons. They were pinching in August. That was a good buy from the bullish configuration. Now they're a bit expanded and you have a little RSI divergence. Doji candlestick today. Driver 51. I posted this. My volatility system for crude oil went short today on actually went short yesterday on SSO. And I posted that on the trading community yesterday and today. Here's the statistics. Again, it doesn't have statistics like the mean reversion systems, but it's respectable. Profit factor of 3.3, 73% winning trades, 63 total trades. Next. Driver 52, here's SCO. That's a way to play a pullback in crude oil. If you don't want to short USO, this is the inverse ETF. Next. Driver 53, natural gas. Again, it's essentially been going sideways, building on the base for the better part of 7 months, as you can see. Next, driver 54, copper. Up 2% for the week. You can see inside this coil pattern. Driver 55, DBA, agriculture, up 1.2%. It's nearing the recent highs. It's in an uptrend. Driver 56, uranium. This has had one heck of a move. Look at this puppy. Beautiful move from this coil break. Next, driver 57. Here's uranium on the monthly. Remember, I've been talking about this really for a few years. I talked about it back in 2020, coming out of this long-term base. It essentially doubled on the first move. Again, this is a bull market, guys. That entered a bull market in 2020. It went into a 1.5 year consolidation in a bull market, and now it appears that it's starting to move up in the next phase. Next, driver 58, coffee. Just following up on this I discussed on the weekend. You have this long-term base down here. We'll see if it can bounce off of there. Next, driver 59, Bitcoin up this week so far. Let's take a look at some of the stocks. Driver 60, here's Bito. That's one of the Bitcoin ETFs. You can see it had a one-day close below the 200-day moving average and then recovered. Next, driver 61, here's Mara. Mara, as you know, had that really nice bounce in late August. Gave a great trade. If you took your profits, you needed to take profits, obviously. It's come all the way back down. Now it's nearing the 200-day moving average. You have some MACD divergence here. So this could be something to watch for a lower risk entry, but you need a trigger. But it is coming down to here, so it interests me. Driver 62, there's the 2-hour view. Taking a look at some other names, driver 63, here's Wolf. It's also, come all the way back to this demand zone. But again, you have the 200-day moving average just below there. That could also be a magnet. You have some MACD divergence building here. Driver 64, Riot, similar look. So you can see a lot of these. Just something to monitor, guys, if you get a trigger. Next, driver 65, US dollar. Again, up a tad today. It's up a quarter this week. So far, mostly going sideways. Next, driver 66, Japanese yen. I covered this on the weekend, potentially forming a falling wedge with MACD divergence. What's a way to play it? Way to play it would be driver 67, FXY. That's the Japanese yen. Okay. Still no trigger here, but something to watch. Next, moving to precious metals, driver 68, gold. Down 0.2%, 0.13% today. It's back to its 200-day moving average. Short-term positive as the stocks have been leading here a little bit. But again, gold has been consolidating essentially since it peaked out in early May. Next, driver 69, silver. Again, had a heck of a sell-off from the upper trend line there. It's below its moving averages now. It's still in the pattern though. Driver 70, probably the cleaner way to look is this weekly chart. You have a very obvious weekly coil forming. Driver 71, GDX. Again, the last rally stalled right at its 50-day moving average. So far, it's just chopping around here. Again, unless you're a gold bug, no reason to be, long this thing without a trigger. So it's been just a nice correction since May. Next. Driver 72, there's the 2-hour chart, kind of monitoring this trend line for now. If that were to break, maybe that would be bearish. Jabber 673, here's the BPGDM. Going to monitor this since it's now in oversold territory. It's now at 14.29%. The trigger is when this closes back over the 8 moving average. Again, gave a great sell signal there in late April. Then it gave a quick little buy signal there in July and quick sell signal in early August. So now waiting for a buy trigger. Next, following up on some of the individual names I've been showing, Charter 74 SVM, it's a silver stock. I do like wedges are some of my favorite patterns, that and flags, but I am monitoring this wedge, but so far no trigger. You can see the MACD divergence. Charter 75 DRD, another one. It's right at his 200-day moving average. Nice clean channel. Next, let's follow up with trade ideas. So Charter 76, Amazon. By the way, the KISS system's been long Amazon for quite a while. But anyway, you can see it breaking out of over resistance again. It didn't raise its smart trailing stop today, but if we get another little up move, we'll probably get a new smart trailing stop. Charter 77, CRS. This was a long idea of mine on Monday's newsletter. Beautiful pop. I posted this as a breakout. Technically, it triggered yesterday. You can see the little Pinocchio move closed below there. I bought it yesterday, but I stayed put, and I was rewarded nicely today, up 6.5% on expanding volume. Charter 78, IBRX was another long idea from Monday's newsletter, and it did give you a trade on Tuesday. It'll pull back today. Still looks okay. Charter 79, SAR was another one from Monday. It was up on Tuesday. Gave you a trade. Next. Charter 80, Walmart. It's been a nice trade over this resistance. Looking a little tired here short term with that black candle doji. Make sure to take some profits. Charter 81, Procter & Gamble. It's been on the list. This could be an either or play. It could be a long off this trend line. Could also be a quick short if it loses this trend line. Charter 82, ACHR. This is one from the weekend and Monday. It's still in this coil pattern, so I'm still monitoring this for a trigger. Charter 83 DBX, one for Monday, it's still valid. As long as it holds this 200-day moving or 50-day moving average here, I'm going to keep it on the list. Charter 84 XLRE, weakening. This has been on the list for since last week. One to watch. Could be a big short if it loses this lower trend line. Next, let's move to some new setups here, guys. So Charter 85 here is Alcoa. Again, this could be an either or. This could be a long here with a tight stop, or you could short if it loses support. Either one. Charter 86, BPT, like the website. A little breakout over this 697 area. Charter 87, BRKR. Big up candle today. Had MACD divergence. This could be a momentum play over today's highs. Next, Charter 88, Farm Brothers, whatever this is, bouncing off this double bottom support on some expanding volume. See if we get some follow through on it. Charter 89, BNMV. Look at this base forming on it. Again, I don't know what it is. Looks like some sort of Bitcoin type thing, whatever. Probably a piece of junk, but maybe you get a trade out if it takes off this base. All right, guys, that'll do it. Now, quick check on futures. Futures are up tonight. ES futures are up 9 points. We'll see how they fare tomorrow. Have a wonderful evening. Take care.